Hello and welcome to the show. I'm Puneet Wadhwa and we are with Mark Matthews today. He's the head of research for Asia at Julius Baer. Welcome to the show, Mark.
Thank you, Puneet.
Let me begin by asking you, with the US Federal Reserve and the RBI making their intent clear in terms of their policies, how do you see the global equity markets play out in the rest of 2022?
Choppy, and not just because of the central banks, but really there are so many moving parts right now. There always are lots of moving parts in the market, but I think really ever since COVID, things have become so complicated and so difficult to forecast that there's just sort of a aura, if you will, of uncertainty that's hanging over the market. And I think on the one hand, the growth stocks, although on certain measures, they look fundamentally quite appealing. There's no buyers yet. And on the other hand, the value investors don't feel ready to come in and buy as well. So there isn't a lot of buying and there isn't a lot of volume in the market. I think it'll chop around, but possibly more to the downside than the upside.
So are you a buyer on dips or a seller on a rise?
If you buy on dips, you have to be very nimble, I think, in this market. Because I do think that the direction is not clear. I mean, I said choppy, which infers sort of sideways, but really every day is a process of discovery because we are, as I said, in an environment with so many moving pieces. So I wouldn't really advise people to be trading much right now.
With the sell-off that we have seen over the past few weeks, it's been quite brutal. So has the sell-off been overdone in your opinion across global equity markets, including India?
Well, just to reiterate what I said, I didn't really think we were going to head back down as fast as we have. I actually thought we were on the way up again. Not to say that I thought we were in a huge bull market, but I thought that things were improving. So I'm a little bit in the dark. I would say that if we are in a bear market, then I think we're probably about 3/4 the way through already. So we're down about 15% from the peak, which was the 3rd of January. And if we're 3/4 there, then we probably will go down, more than 20%, which makes it technically a bear market. But I mean, there are things that one can look at as positives. And one I do think is that the current expectations for the Federal Reserve's tightening are going to prove to be exaggerated. In other words, the Fed will not be tightening as much as the market expects. And that I think will become clear in the summer. And that should be a positive. I also think that there are signs that economic growth is starting to slow, which will in turn be helpful in bringing down inflation. So those sorts of things I think are actually good things, but they won't be really apparent until the summer.
In the Indian context, Mark, are there any sectors and stocks that are investment worthy right now, or you find most of them overheated?
I don't think it's necessarily overheated, but I do think that the market right now is trading on macro events, macro environment, if you will, and not fundamentals. And so India is taking its cue from these global macro issues of inflation and et cetera, just as much as any other market. And so in that context, I think that the place that will continue to do well is the commodity producers, because they are the only real beneficiaries of elevated inflation. And they will be making very good profits this year because commodity prices are high.
On an overall basis, do you think India Inc. could see earnings downgrades over the next couple of quarters, given where the inflation is and how the interest rates play out?
Yes, I think that is the case. Although, just to reiterate, most of the earnings growth will be coming from financials and IT and the commodity producers themselves, about 2/3 of the earnings growth for the Nifty. But I suppose that if people do start to worry about the overall state of the economy and headwinds from higher interest rates, then on the one hand, the banks do benefit from higher margins when the interest rates are on the uptrend. But on the other hand, people might start to worry about non-performing assets again. So I suppose I wanted to say would challenge the assumptions for the banking sector potentially.
Thank you, Mark, for your time today. We hope to see you soon.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.